I have a question about conveyancing. I was just wondering if you could run me through conveyancing really quickly because I'm not understanding how property titles get transferred. And the second thing, if you have time for it, if you could just run me like the hypothetical start to finish of a real estate transaction, just a short one.
Okay. Actually, this is a good example, right? So, real estate transaction does not happen in a vacuum, nor does a mortgage transaction. So, let's take a holistic look at the transaction, which is somebody wants to purchase a house. Okay. So, let's say somebody wants to purchase a house. I'm a buyer. I want to purchase a house. So, this is a step by step process, and this is a holistic process. So, I, as a buyer, want to purchase a house. First thing I should do is go to a mortgage associate and say, hey, I'm looking to buy a house. I need a pre approval for a mortgage. The mortgage person will then ask for their income, their liabilities, and they will collect documents to substantiate that. And based on that, they will say, you qualify for X amount of dollars, let's say $450,000. So once the buyer has this information, they should go to the real estate agent and say, hey, I'm looking for a property and these are my criteria. And in the criteria, they'll talk about the type of the house they're looking for, the size of the house, the location they're interested in, and the budget they have. And now they received a budget of 450,000. So let's say that's the purchase price, not just the mortgage amount. So 450,000. So you as a real estate agent would go show them properties. Let's say they like a property, they write an offer on it. So as a real estate agent, before you start working with them, you will have them sign consumer relationship guide and buyer representation agreement. If you're a mortgage associate, you will sign a service agreement with them. And that service agreement will be based on the type of relationship that your brokerage has chosen, and you will have to follow that relationship. So, same thing with a real estate agent, you will sign a service agreement with your buyer, and that service agreement will be based on whether your brokerage is designated agency or common law agency. You would have to find appropriate forms and sign that. So, on both sides, as licensees, before we engage with the consumer, we have to get them to sign. We have to do relationship disclosure, and we have to get them to sign a service agreement. Now, as a real estate agent, you show them the properties, then you would write an offer on the property. So you write an offer, and in the offer, it would be okay, how much the purchase price is, what are the different terms of the purchase contract, which would be when the possession date is, how much deposit you're putting down, what conditions are in there. Generally, it would be financing condition and property inspection condition. So these would be some of the conditions, and you would have that purchase contract prepared in consultation with your buyer, because your buyer is who's telling you what they want, right? So that will then get submitted to the seller's agent. Seller's agent will take that offer to the seller and say, hey, this is the offer we have received. And then the seller's agent will talk through the offer with their client. A lot of times there will be a back and forth that happens because the seller may not be happy with the price. Seller may not be happy with some of the terms because, maybe the possession date is too far away. Maybe the condition removal date is too far away. Maybe the deposit is too low. So there's various terms you can negotiate on. And sometimes the buyer will say, okay, you know what, they're asking for a higher price. I want the furniture included in it. So you would do that. You would include the furniture. And then you have a final offer that is approved by both the seller and the buyer, and both parties sign it. Now, that offer will then go to the mortgage associate. And based on that offer, mortgage associate will then take that to the lender and say, hey, I have a client. This is their income, this is their liabilities, and this is the purchase contract. So the reason they want the purchase contract is because the lender wants to know what property they are buying. So you would go take that to the lender while the lender is approving the property. In the meantime, from the real estate side, so first of all, they're waiting for the financing. Usually, buyers don't move forward with home inspection till they have financing approval, right? And this is why you need to understand both sides of it, because if the financing approval is not done, then there's no point in wasting money on doing a home inspection.
Like the contract falls apart anyway.
Exactly, right? If the contract falls apart, let's say they are getting higher, I mean, the value of the house is higher than what the lender is going to prove them, because it's not just the income that comes into play, it's the liabilities as well, right? So if a person has 100,000 in income and no liabilities, no car payment, no,
Agreed.
right? They would qualify for a higher amount and at a better interest rate than somebody who has the same income, but now they also have, a line of credit that they need to pay. They also have a car payment. They have a student loan. Now that person, even though the income is the same, a lot of times people get stuck on income side. So as a real estate agent, you need to understand the financial situation of your buyer. And as a mortgage broker, you definitely need to understand that because you guys are both working on the same deal, right? So we both parties. So we need to understand. And this is one of the reasons we do these sessions together as well, because you need to understand both sides of it. You can't be blind to the other side. And right, so this is because most of the time you're working with a mortgage associate, because the mortgage broker will be like, dude, I need this, right? And sometimes most of the times as a real estate agent, you want to pick up the phone and you call the mortgage broker and say, what do you need, right, from our side? So you guys will be working together on this transaction. It's not like one person's deal or another's. You're working together. Okay, so then if the financing is not approved, then the buyer is not going to even bother with the inspection because it's a waste of money at that point because they're not going to need that. So 99% of the time, we always wait for financing approval. And then once the financing approval comes in, and this is why both parties, mortgage and real estate agents, need to educate the buyers to get a pre-approval done first, because a lot of times lender will take a long time. If the lender is taking too long, then now you as a real estate agent, as a mortgage broker, you tell the real estate agent, hey, this is taking a while. We need another few days. We need a week. And then you as a real estate agent will go to the seller's agent and say, hey, we need an extra week. So at that point, you will do an amendment to the purchase contract to extend that condition removal date. And then you will say, you know what, in the amendment, you will say delete the clause that says that the conditions will be removed on X date, and now insert that they will be removed on Y date. And that document amendment then has to go to the mortgage broker because they will need it as part of their paperwork.
And the amendment is, you do an amendment after the offer is accepted?
After the offer is accepted. Yeah, so let's say there's 2 weeks for removing conditions, right? Financing and home inspection. Now you are on 2 weeks or 10 days, right? Or 14 days, whatever. So let's say 14 days, and now you're on day 13, and you call the mortgage broker, where's my mortgage? Where's my financing? Right? And there's no financing, and the mortgage broker says to you, well, can we push it back by a week? Then you would do an amendment. So you would call the seller's agent and say, hey, we really need extra time. And now it's up to the seller whether they give you that time or not. And the seller's agent will then go, talk to the seller and say, please, can they get an extra time? All that kind of stuff that we as agents have to do in the background. So then the seller says, okay. And the seller's agent will then get the amendment signed. So both the buyer and seller have to sign that. They will get it signed. You will get it signed by the buyer, send it to the seller's agent. Seller's agent will get it done from them, from the seller side, and they will give you the amendment. Now the condition removal date has been pushed back a week, right? Now that amendment has to go to the mortgage associate, so the mortgage associate can get the approval done within that time frame. They have to give it to the lender so that the lender is aware now, right? So once, let's say, financing approval comes in, the mortgage associate will send the buyer or you an email saying, hey, we have the mortgage commitment. And then the buyer will, usually you as a real estate agent would have to help the buyer arrange an inspection. You as a buyer's agent have to stay while the inspection is being done, because you are going to open the house for them. You have to stay on the premises. And it's a good idea to kind of, check in with the inspectors, see what's going on. So you have some insight into what the potential problems could be, so you can do something about them. So anyway, so once the inspection is done, inspection report usually comes like the very same day or the next day. Now, you would, as the buyer's agent, discuss that inspection report with the buyer. I actually, while we have been in this call, I just got a message from one of our realtors saying, hey, got an inspection report. Can we discuss this, right? So I, as a broker, because most of our agents are newer, I will go over the inspection report with our agents and say, okay, this is problematic, this is a big deal, this is not as big a deal. And I would educate them or kind of work with them through that. So then they can take it back to their buyers and discuss that. But usually in the inspection report, it will show what are the issues, what are major issues, and what are, what needs to be done about them. They won't give you a price on how to fix it, on how much it would cost to fix it, but they'll kind of lay out the issues. And generally, they'll say what needs to be done to fix the problem. So once the inspection report comes in, now you discuss with your buyer. The buyer will be like, oh my God, there's a lot of problems. We need to get the seller to fix. Then now you're doing an addendum. In the addendum, you will say, okay, these are the problems that the buyer would like the seller to fix. You'll get it signed by the buyer, and then you call up the seller's agent and you're like, okay, we got a few issues. Then seller's agent will be mad at you because you got extra time, and now you're coming with a laundry list of problems that the seller has to fix. So then you would have to calm them down. Then they would then take it to the seller, and the seller will be upset. And right, so there's that emotional stuff that happens, and you have to manage the situation. But anyway, so let's say seller comes back and the buyer's asking for $10,000 worth of stuff to get done. They say we'll do 5,000 worth of stuff, or we'll give a credit of $5,000. You will then take it back to your buyer. The buyer will hum and haw, and let's say they agree because they really like the house. So now that addendum will get signed by both the parties. It will go to the mortgage associate, and mortgage associate will then have it part of their file that goes to the lender. So, okay, so once all of this, so then you would waive the conditions as the buyer's agent. The buyer will send a waiver of conditions, and then you will send it to the seller's agent. Seller's agent will then mark the property as sold in the MLS system. Okay, so now all the conditions have been met, and that non-waiver has to go to the mortgage associate because that's a critical document for them. So all these documents that are supposedly real estate documents, they're actually mortgage documents as well, because you cannot do the deal without those documents, and you need to understand those documents. Okay, so once that happens, you send that waiver of conditions to your mortgage associate. Okay, so both the parties are now waiting for closing. So during this time, lender will receive all these documents from the mortgage associate. And when they gave the commitment during the financing condition, they would have given a commitment letter for mortgage. They may have some conditions, and you may have to help the buyer fulfill those conditions, even though it's just like telling them to fulfill those conditions or asking them, hey, do you need any help with anything, right? So those conditions, commitment letter conditions, could be they need to send 90-day deposit, like they need to give a bank statement, or they may have to pay off some loan and they have to show proof that that loan has been paid off, things like that from the mortgage side. Once the lender has received all of those, then they will give a final approval of the mortgage, and then conveyancing process starts, right? So conveyancing process is done at the lawyer side. So seller's brokerage will generally send all the conveyancing documents. So conveyancing documents would be your purchase contract, any amendments, any addendums, notice of waiver of conditions. All these will be sent to the lawyer. If you're a selling brokerage, you will also include your invoice, and this invoice would have both sides brokerage commission, so buyer's agent commission and the seller's agent commission. That will then go to the lawyer, and then lawyer will take a look at that paperwork, and if there's anything extra they need, they would ask you, but generally it's just that. And then lawyer will also receive instructions. So at the same time, mortgage associate will have to submit all these documents plus the income and credit report and all of that to the lender, and then lender will send conveyancing instructions to the lawyer. So in those conveyancing instructions would be the mortgage, actual mortgage paperwork. So the lawyer would then, once they receive that, a lawyer will set up an appointment with the buyer. They'll say, can you come to the office on this date? And then once the buyer goes in, the lawyer will go through the mortgage with the buyer. They will say, okay, this is how much the mortgage is, this is the interest rate, this is the total interest you will be paying, and if there are any other cost of capital, right? So those things will be discussed. So any default insurance, any other lending fees that they are charging, those will all be written out. And this is something that mortgage associate will do as well, but the lender will go over before signing the mortgage. So once all of that is done, the buyer will sign the mortgage documents, and then the lawyer will talk about closing costs. Closing costs will be things like, so actually one of the requirement the lender will have will be that the buyer needs home insurance. Lender will not give mortgage without that, so because they want to protect the property, so they need home insurance. So home insurance would have to be done. So closing costs will be any kind of adjustments
Property
on
tax.
property taxes, utilities. Some municipalities do like a water bill for the year, sewage bill and that kind of thing for those utilities, not your heat and electricity, but those ones that are provided by the city. Some cities, smaller cities, bigger cities will charge it directly to the property owner on a monthly basis because they'll have a water meter and stuff like that. So you'll get an monthly bill with water, gas, electricity all in one. Whereas other municipalities will have like a flat rate charge. So if there's a flat rate charge for utilities, and those will be again the sewage, the water, those two main ones, then there will be adjustments for that. So basically, adjustment means that the seller is only paying for the utilities and property taxes up until the date of closing, right? And then the buyer is responsible for the rest. So let's say if the seller has paid for the entire amount, then there would be a credit. So then basically the buyer would have to pay for their share of it, which then will go to the seller. But let's say it's an early part of they're due June 30th, right? So if house sold prior to that, they may not have paid those, then there will be an adjustment done, right?
So it's just
So
like splitting the property taxes.
correct, based on the time that each party is going to, be responsible for, like, have ownership of the property.
I see.
Yeah. So the lawyer will have cost of adjustments. Basically, there will be a letter which will have breakdown all the items. They will say, these are our fees. These are adjustments for utilities. This is adjustments for property taxes. This is title registration costs, because when they submit the mortgage and the transfer of title, like the paperwork, change of
Mhm.
ownership, so they have to send the purchase contract to the land titles office. So when they send these documents to the land titles office, so there's a charge for registering a mortgage on it. There's a charge for transferring the title. So there will be land titles fees. And those land title fees, the buyer has to pay for them, of course. So they will all be broken down. And then the lawyer will have a contingency charge, basically. So they will charge an extra $250 or $500, which would be above and beyond all the stuff they have listed. And this is just an amount on hold in case there's some extra charges, right? So then it will come out of that. So then there will be a total amount that the buyer basically has to bring in, right? That they have to pay the lawyer. Those are all the adjustment closing costs. So once that is done, then the lawyer will get the buyer to sign everything, and then they will send the money. So the down payment will come from the buyer. So they will say to the buyer, your down payment is 100,000 plus the extra 10,000, let's say, in closing costs. Now you need to bring a bank draft for $110,000. So, and then that goes into the lawyer's trust account. So that money goes into the trust account. So then the lender will also send the money to the lawyer into their trust account.
Does the
Then
deposit go with that?
deposit stays with the listing brokerage. So what happens is, so let's say the total commissions are 20,000. So when we as listing brokerage send lawyer instructions, convincing documents, we will say this is our invoice. The commissions are 10,000 for the buyer's agent, 10,000 for the seller's agent plus GST. So the total amount is 20,000, 21,000, let's say, right? And then we will say amount in trust will be 10,000, and then so the total owed it is 11,000, right? So this is the invoice we as listing brokerage will send to the lawyer. The lawyer will take a look at that, right? So then so that gets calculated into how much the mortgage, like the mortgage amount, they will have that goes to the seller's agent, though it doesn't go to the buyer's agent. Buyer's lawyer will just be looking at down payment, right, closing cost, and the mortgage amount that comes from the lender, right?
And, at the I noticed you mentioned the titles office earlier, I think. Is
Yeah.
that where that's where title insurance applies?
So title insurance will be one of the costs. So what happens is if somebody has a mortgage on a property, lender will require title insurance,
Okay.
right? So that will be, let's say, approximately $250. And then if there's no RPR, then usually we will write in the purchase contract that seller will pay title insurance, right? So then the seller may contribute towards that, which is usually it. So they'll usually pay. So what the buyer is essentially paying or borrower would be the lender policy, right? So if there's no RPR, we can write it into the contract that the seller will cover the title insurance, which is homeowner's policy. Okay. So lender will require the lender policy, which will always be paid by the buyer. The homeowner policy can sometimes be paid by the seller because they have no RPR, so they have negotiated that into the purchase contract. So if seller has a current RPR, then the buyer will be responsible for both the sides of the policy, right? Lender policy as well as the homeowner's policy. So you're looking at about $500 in title insurance
And
costs.
and
Yes.
when I'm asked the question, "Is title insurance and RPR interchangeable?"
No,
Do I answer yes or no?
no.
Okay.
No, they're not. They're two different things, right? They serve two different purposes. So, title insurance is to protect the buyer in case there are issues. But RPR shows you where everything is located in the property,
So is
right?
title insurance just like a Hail Mary for not having a real property report?
Correct.
Okay.
Yeah. Like you'll need real property report if they have to make changes, like they wanted to build a garage in the back. The
Mhm.
city will require a site map and you may end up doing a real property report and stuff, right? So it's a different reason for having an RPR, but title insurance is just like, it will just save you. Yeah.
Thank you
Um,
for answering all of my questions. I appreciate the
So
time
wait,
that
wait,
you took.
wait. Let's finish the conveyancing process. We're not quite
I'm
done
good.
yet. This is a bit of a like a so you need to understand. Okay, so once buyer's lawyer has all the funds in the trust account, they will send it to the seller and seller's lawyer into their trust account. Seller's lawyer will then pay off the mortgage. They will pay off any loans or liens against the property, which could be condo fees, could be CRA lien, could be property tax, like property taxes, any charges that are liens or loans registered against or caveats registered against the title. They will clear the title, right? Pay that out. And then, so once the title is clear, then those documents will be submitted. So the purchase contract will be submitted to the land titles office, including like with the whole, these loans have been cleared, right? Those will be submitted to the land titles office. Once that's submitted to the land titles office will register. So they will say cancel the previous title and then they will give a new title in the new buyer's name and with the new mortgage and everything else. There's a delay in that process. There's a delay between submission of those documents and the day they actually get registered because land titles office is always behind. So title insurance provides, that's known as gap. So there's title insurance provides gap coverage as well. So something goes wrong during that time period, they will be covered. So anyway, so once the land titles office gets to that, they will register that. And then they will send documents back to the lawyer's office saying, transfer of title has happened, and they'll send a new title to the lawyer. The lawyer will then take a look at it and they'll send the package back to the buyer with refund of extra money that they paid. So that's the conveyancing process.